Hello and welcome to the Makaya Wealth Building channel, as well as today's video on the power of compound interest. In this video, we're going to explain how compound interest works and why it's such a powerful tool for building wealth. Whether you're just starting out in your career, or you've been saving for years, understanding compound interest can help you make smarter financial decisions and grow your wealth over time. So, let's dive in. You may ask yourself, what is compound interest? Well, compound interest is the interest that is earned on the initial principal and also on any interest that has been earned previously. In other words, it's interest on top of interest. This may sound simple, but it's actually a very powerful concept that can have a significant impact on your financial future. To understand how compound interest works, let's look at an example. Let's say you invest $1,000 in an account that earns an annual interest rate of 5%. At the end of the first year, you would have earned $50 in interest, bringing your total balance to $1,050. In the second year, you would earn 5% interest on the new balance of $1,050, which would be $52.50. So, at the end of the second year, your balance would be $1,102.50. As you can see, the interest earned in the second year was not only on the initial $1,000 but also on the $50 earned in the first year. This compounding effect continues year after year, and the longer you leave your money invested, the more powerful it becomes. Over time, the interest earned on your original investment can dwarf the original amount you invested. You would ask me, why is compound interest so powerful? Compound interest is powerful for a few reasons. First, it allows your money to grow exponentially over time. As we saw in the example, the interest earned in the second year was not just on the initial $1,000 but also on the interest earned in the first year. This compounding effect means that your money grows faster and faster as time goes on. Second, compound interest allows you to earn interest on your interest. This means that your money can continue to grow even if you're not adding any additional funds to your account. Over time, the interest earned can become a significant portion of your total balance, allowing you to earn more and more each year. Third, compound interest can help you overcome inflation. Inflation is the rate at which the cost of goods and services increases over time. This means that the purchasing power of your money decreases over time. However, if you're earning a rate of return that is higher than the rate of inflation, your money can maintain its purchasing power and even grow in value over time. Fourth, invest in a diversified portfolio. Investing in a variety of different assets can help reduce your overall risk and increase your chances of earning higher returns over the long term. By spreading your investments across different asset classes, such as stocks, bonds, and real estate, you can take advantage of different market cycles and minimize the impact of any one asset performing poorly. Fifth, reinvest your dividends. Many investments, such as stocks and mutual funds, pay dividends to investors. Instead of taking these dividends as cash, consider reinvesting them back into your portfolio. By doing so, you'll be able to take advantage of the compounding effect and maximize your returns over time. Sixth, avoid high fees and expenses. High fees and expenses can eat into your investment returns over time, reducing the impact of compound interest. When choosing investments, be sure to look for low-cost options, such as index funds and exchange-traded funds, ETFs. Seventh, use tax-advantaged accounts. Tax-advantaged accounts, such as 401(k)s and individual retirement accounts, IRAs, can help you maximize the benefits of compound interest by allowing your money to grow tax-free or tax-deferred. By taking advantage of these accounts, you can reduce your tax bill and keep more of your money invested. Eighth, regularly review and rebalance your portfolio. As your investments grow and your financial goals change, it's important to regularly review your portfolio and rebalance it as necessary. By doing so, you can ensure that your investments are aligned with your goals and risk tolerance, and that you're taking advantage of the power of compound interest. Ninth, don't chase hot investments. It can be tempting to try to chase the latest investment fad or hot stock, but this approach rarely pays off in the long run. Instead, focus on building a diversified portfolio of high-quality investments and staying the course over the long term. 10th, seek professional advice when necessary. Investing can be complex and confusing, and there may be times when you need professional advice to help you make smart financial decisions. Consider working with a financial advisor or planner who can help you build a customized investment strategy and guide you through the ups and downs of the market. Now that we understand the power of compound interest, let's look at how you can use it to build wealth. There are a few key strategies you can use to maximize the benefits of compound interest. Start early. The longer your money is invested, the more powerful the compounding effect becomes. This means that the earlier you start investing, the more time your money has to grow. Even if you can only afford to invest a small amount each month, starting early can make a big difference over time. Be consistent. Consistency is key when it comes to building wealth with compound interest. If you can commit to investing a certain amount each month, you'll be able to take advantage of the compounding effect and maximize your returns over time. Be patient. Compound interest is not a get-rich-quick scheme. It takes time for your money to grow, and there will be ups and downs along the way. However, if you stay the course and remain patient, you'll be able to reap the benefits. To conclude, the power of compound interest cannot be overstated. By starting early, staying invested, and following these strategies, you can harness the power of compounding to build significant wealth over time. Remember, investing is a long-term game, and the key is to stay disciplined and focused on your goals. So, start investing today and let the power of compound interest work for you. Thank you for watching.